with TopDogTrading.com. Today we're going to look at how to determine the right time interval for your charts. So let's get right into it. First of all, we're going to talk about reliability. That seems to be the number one issue that people are concerned with when they ask me, hey Barry, which is the best time interval for me to be trading? Should I be trading 1-minute charts, 5-minute charts, 6-10 tick charts? Should I be trading daily charts? And those are the issues that they're looking at. Which one would be most reliable? So, very good question, and the answer to the question is that it depends. But let's look at some of those specifics. Here are the main issues. Number one, how many people are using it? And that's really the big issue. When you look at any particular time interval, how many people are using it? That's what makes it more reliable. So if you have a lot of people trading off of a 5-minute chart, that means that everybody's seeing similar things that you are, and therefore they're going to be reacting to those things, specifically support and resistance levels. And you'll see certain support resistance levels on, for example, a 1-minute chart that you wouldn't necessarily see on a 60-minute chart. So if there's a lot of people trading off a 1-minute chart, then people will respond to those levels. However, if most people are not looking at a 1-minute chart, but they're looking at a 60-minute chart, then those 1-minute chart levels are not going to be very meaningful, simply because the market is an auction place. And the places where most people buy, most people sell, those are the places on the chart where you get your turning points, where you get your blockage, you get your support really working, you get your resistance really working. And because of that, it's very simple. It's somewhat of a self-fulfilling prophecy, but based on the crowds, the masses. So that's the most important thing. But then there's a subsection of that, and that is how many big money players are using it. So just because a lot of amateurs are using, say, a 50-tick chart, that doesn't mean that it's very significant, because amateurs are usually wrong. So what we really want to do is dig down below that, and we want to look at the big money players. How many of the big money players are actually using that particular interval? Because they're trading bigger size. So you don't need as many big money players trading a particular chart interval in order for it to become significant, because they're trading more contracts, lots, shares, and also because they also tend to be more knowledgeable. They're right more often than the amateurs are. So those are the two primary issues that create significance and reliability in time intervals. So what are some of the most popular time frames? Well, for intraday charts, I would say probably the 5-minute, the 30-minute, and the 60-minute charts are very, very popular. Now, I haven't seen any research, so I'm not giving you any hard data here. I'm just speaking from my experience, talking with a lot of traders all over the country. Been to Chicago, been to New York, been to many, many traders expos, been to I've been tutored and trained by many professional traders and floor traders, and even on the floor they're using charts these days. And you've got laptops and computers all over the floor of the exchanges. So when I talk to people, and specifically the pros, these are the time frames that seem to have come up the most frequently. Now you'll also see 2-minute charts, sometimes 1 minute. I've seen 15-minute charts. And I've even seen 10-minute charts here and there, and 45-minute charts. You know, you'll see everything, right? You'll see everything. There's different people using all different time frames. But if I had to narrow it down to 3 in my own personal experience, and this is just anecdotal evidence, these are the 3 most popular time frames used by the professional traders that I've encountered. And then, of course, beyond intraday, daily, weekly, and monthly charts are always very popular, and therefore tend to be extremely reliable as well. Now, there's other issues to consider other than just what time frames are most people trading. And the first one is, what is your risk tolerance? Now, these are going to be specific issues with reference to you that help you make an individual decision as to what are the best time intervals for you. So what is your risk tolerance? That is number one. Short-term charts reduce your risk per trade just because the range of each bar is more narrow, and therefore you can usually risk a smaller amount on a 1-minute chart than you would on a 60-minute chart. Longer-term charts increase your risk per trade, but of course there's a flip side of that coin, as there always is, and the longer-term charts also increase your potential reward. So the risk-reward ratio is not necessarily any different. It's just a matter of your personal psychological risk tolerance. Now we're talking about a psychological issue here. How much can you bear to lose? And on the other side of it, the reward too. Sometimes people don't think about this. But I find that a lot of my students have a hard time staying in winning trades. On shorter term charts, you don't have to stay in the trade for as long. On longer term charts, you must be able to stay in the trade for a longer period of time in order to get that reward. Do you have that type of patience? So these are individual psychological issues that only you can answer for yourself. Another issue is, what is your account size? Obviously, will vary from person to person. Longer-term charts increase your risk per trade, and therefore they do require a larger trading account. In other words, you only want to risk a very small percentage of your account, maybe 0.5%, 1%, 2%, a very small percentage of your account on each trade. And so therefore, that's going to be directly related to the chart interval that is best for you. So if you have a small trading account, really not going to be able to do proper money management and use longer-term charts. Short-term charts reduce your risk per trade, and therefore they can fit into the money management profile of a small account. And finally, number 3, what is your psychological need for trade frequency? And the psychological issues are very, very important. Do not underestimate how important these are. Psychology is a very, very important part of your trading, and so you must consider it. Short-term charts are very good for those with a short attention span, so you don't miss trades. Short-term charts give you more trades in a shorter period of time. And so therefore, some people find that they just psychologically have to have more trade frequency. Otherwise, their mind starts wandering, or they start responding to email, or they leave the room. And of course, as soon as they get distracted, that's when all the good trade setups come, and then they miss the trades, and they can't keep their attention on the market. So you might work on your attention span, but on the other hand, everyone has their own psychological profile, and yours may just be such that you need to have more trades, and therefore shorter term charts are better for you. Longer term charts are good for those who need more time to analyze a chart before executing, because again, each one of these has two sides to the coin. So the downside of the short term charts are that yes, you get more trades, but you've got to make faster decisions, because those bars last a shorter period of time. If you're trading, for example, a 1-minute chart, well, you don't have too much time before that setup comes, before you have to actually execute that trade, before you have to enter that trade. Otherwise, you're going to miss your trigger. So using short-term charts, yeah, it's great that you get more trades, but you've got to be quick on the draw. You've got to be a quick thinker. You've got to be able to analyze the chart and then be quick to act on it. And if that's not you, if you need more time to analyze and execute a trade, then it's better to use longer-term charts for you. So those are just some things to get you started in helping to determine which are the best time intervals for you. I offer a 5-day video correspondence course, 5 days of video instruction, totally free, interactive quiz at the end of each video, and indeed included in this I offer one of my favorite trade setups with all the rules and the filters of that trade setup, and that's included for you for free on the 4th video. Just go to the website on your screen and I'll be happy to share that with you.